Good evening, good afternoon, good morning, everyone. I'm just going to walk you through what's happened with the Australian stock market for the week ending September 13th. I'll do a bit of an introduction. I'll talk about a high level view of what the trends have been, and I'll just give you some insight and some other aspects that are going to drive the overall economies and the stock market performance for the next few weeks and months ahead. Here's a brief bio about myself. I'm the CPA CGA. I've balanced my time between financial solutions and reporting. I've done a lot of business process changes. I worked quite a bit of time with macro micro indicators. Stock market is one of those things because when you're doing your planning and you're doing your predictable analytics, you're looking at indices like the stock, inflation, to overlay that into your strengthening your forecasting on sales and other areas of your budgeting, forecasting, and planning cycle. So let's look at the stock market. Now, over the past day or so, there's been some up and down swings. The stock market in general this week did not have a really good week. It's down significant from the previous week, and part of it I suspect has to do with the economic health of what's going on in Australia. The Australia's market is tendencies to be driven by the resources sector, and they've made some really good decisions around LNG projects on Western Australia. But they're predominantly dominated for the core metals area, whether that's copper, iron ore, and even into the lithium. And there's been scale back in production in those areas. Like China's steel production's been scaled back a bit, and they order a lot or purchase a lot of iron ore from Australia, so that's impacting that sector. Lithium is seeing ups and down swings due to low adoption of the EV and just challenges with EV in general. And it's just something to bear in mind when you're looking at this because of the way it is. Australia and Canada are very similar because their stock markets are structured around the natural resource sector. And it all depends on how the government supports policies in those areas that will drive growth. So this kind of gives you an example of where the trends were. I only started doing this recently where I compare week over week. And as you can see, there's a sizable drop since the beginning of September. And that's interesting because when you look at the trends, pensions and other investors look at the stock market in Australia, and there's been some wild swings in terms of what's happening in performance. This gives you an idea where they're seeing some issues in terms of things. And as you can see in the third paragraph, lithium is one of the ones that's seen significant amount of challenges. And then you're seeing the second large paragraph on the economy. And China has been struggling with domestic demands due to housing issues in there. And those of you who follow China realizes that they've got a lot of property that they've built that is either unoccupied or is less than 10 to 15% with occupancy. And it's a big issue there. And they're also in trade wars with the countries around the world in terms of how they support their industry, especially the EV side. So there's significant challenge facing Australia headwind, especially in Europe and all that. And that's facing a lot of pressures on the stock market. Plus also Australia is coming up into an election year. And there could be some challenges for the incumbent, especially with a slowing economy and other factors are driving confidence with his government. This gives you an idea of some really trading higher companies. The interesting one is Fortescue Metals because they're a huge lithium player, and they've seen some improvements in there. You're also seeing some stuff around the food group, which is probably you're seeing that the comment there is it's basically a takeover speculation. And then you're seeing some other things going on with particular sectors. So if you see the lower side, the particular with Delta Lithium, you're seeing their approval mining proposal. So they're probably struggling with that. Regulatory process is a significant challenge for government. And it needs a lot of collaboration and coordination to get those projects approved in a timely fashion. So you're seeing some examples of where they're seeing strengths and weaknesses. This kind of gives you the last 52 weeks in terms of what's going on with companies. I won't spend a lot of time here, but it just gives you some ideas where, like I said earlier, the Australia stock market is a tendency to drive a lot of it into on the metals and the mining sector, and that's why you see a lot of skewing numbers in terms of performance. This gives you an idea with commodities, and commodities have had a really rough week this week. Whether it's oil, whether it's the mining stocks, it's just been a rough week for commodities in general. And you can see by this chart that there's some struggles with it. Now, I want to talk about a few points here. I always put about a top 10 when I do these presentations on it. And the key area is where we're seeing with iron ore. Like Vale's a big miner, and they're saying where they're looking at production in over the next few months. We're seeing lithium pivoting around what they're doing, what they're developed to align with the growth in energy storage as well as EV. Copper is another key metal with the green transition. Woodside Energy is a big player in the liquid natural gas market, and Australia is a big player there, so they're relooking at capital investments and contracts because Japan, Greek, and some other countries are looking for natural gas as a way to pivot off the coal burning energy requirements to convert some of those plants. So that's a big thing that's in terms of the emissions requirement to reduce it. Hydrogen is a big focus point for many countries. Australia is looking at that too as well. But green hydrogen has its own challenges with cost, with technology and the cost of producing green hydrogen. So there's a lot of that. And it's also telling you about the retail sector that is still struggling. They don't see much improvement in consumer spending till sometime into 2025. And of course, technology. The key area is we're still seeing companies define a data and AI strategy in terms of how they're going to leverage it. Data and AI is not new. What's new is the long language models and some other use cases that you can leverage technology a lot better than because product enhancements can drive it. And of course, ESG. Companies in Australia are gearing up to the 2025 mandate around emissions reporting. And you can't have a conversation with Australia without understanding the housing cost. Affordability is an issue. There's been some infighting between the Reserve Bank of Australia and the Treasury around alignment of policies. So the criticality of any sort of policies the government is, they have to look at what they're driving with inflationary policies. And Australia is like Canada, is struggling with innovation. They're struggling with productivity. So governments around the world need to start addressing the productivity issue because it's not going to improve their GDP per capita, and it's not going to provide the wealth and the necessity of life to support the overall growth and sustainability of the economy. And it's just going to put more pressure on government. So it's something to bear in mind. Here's some additional information how you can reach out to me. There's my contact email there. Like I said, I do these presentations quite a bit. I do monthly reports as well. I'm all about driving the best experiences for clients and prospects and talking to them to look at technology, how technology can be used to help resolve business process change, look at automation. Everybody talks about you jump all over technology, but you don't necessarily jump over technology unless it's viable and makes the most sense and you've done the return on investment, including an NPV calculation, because money is tight. Projects will get targeted with capital where they make the most sense for a business. Thank you.